Good morning, traders. This is Rose. Today is Thursday, September 22nd, 9 a.m. Eastern Time. All right, just give me a second. All right, so we had 8:30 a.m. jobless claims report just came out. There's not much going on after that. There's some news, but I don't think it's the market moving category, so we don't need to worry about it. If you're trading gas, natural gas, there's a report coming up at 10:30 a.m. I don't trade that, so tomorrow is PMI composite flash, so that is 9:45 a.m. report. But that's all we're gonna get tomorrow. All right. Yesterday was FOMC. And we had a very interesting reaction, but all within the, what we were expecting, basically, what the price could do in terms of looking at the prior day's price action, support and resistance, or supply demand, or sell or buy zones, that we would get some kind of reaction, which we did. And I've been all day yesterday telling you guys that find your support and resistance, because that's where the FOMC candles will have a reaction and it'll probably reverse there. So if you actually squeeze the charts, and I want to go over this real quick because I think people are having a hard time figuring out where to really enter with limit orders. And support resistance, what market did before at certain levels, okay, it's very important. Institutional traders will look for those levels because those levels generally have two things: more orders and stop orders, okay, or people stops. But remember, they don't trade against the retail traders. We're nothing. We only make up, I don't know, maybe even 5% of the market, although I'm not 100% sure of the ratio. But institutions trade against each other, okay? They trade against other institutions, so they're trying to trap each other. We're nothing. We're basically fly on the wall, okay, in a way. I know you don't want to hear that. You want to hear important because your money is on the line, but that's what it is, okay? So accept who you are, which I did. So what I do is I tend to look for those areas because I want to trade with the institutions. I want to trade with their orders. I want to piggyback ride, okay, with where those orders are and what they're doing. And that's the only way that I'm going to stay against, okay, I'm not going to be against the price, but I'm going to stay with the price. So in order to do that, you have to understand the behavior, and that's where the BTC course come in handy. You have to learn limit order versus stop order market, how it forms, what it really means, okay? So what a balance zone means, how do the limit order, trades happen or form, how does support and resistance work, how do you use support and resistance for news candles. So you can trade anything as long as you know what you're doing. So take a look at, for example, here. Market has been down. I mean, you don't have to look at the daily chart. You could see we're making huge gaps. There was some kind of trading range. This is the limit order market right here. This gap right here is an impulsive move down. So that is a stop order market, okay? It is also, to me, stop order markets are bad price action. What does that mean when I say bad price action? People will disagree and they're going to say, oh, no, that's good, great, market is moving, so that's great. No, that's not what it means. Something goes so fast in such short amount of time and goes so big and so fast, people are having a hard time entering into the trade. That is bad price action. You're never going to be able to get your order processed. Just like yesterday, I tried to enter and it didn't, it put my order somewhere else. I couldn't even enter with market. It was just so difficult. So I had to step aside. That was bad price action. These bars are huge. They're creating gaps. Now, what is a good price action? this. Now, many people will disagree with that. Well, that's a choppy market, Rose. What are you talking about? Choppy markets are where the institutions position themselves. They position their million-dollar orders, thousands of hundreds of $1,000s of orders. So they divide a $1 million order into little blocks, because they cannot take this order, put it in one place. They cannot do that. It would mess up the whole market. Okay, so that's not how it works. So they take it, they divide it into small blocks, and they put their orders. They don't do it themselves. They work with the broker firms. Okay, so they work with their broker. So those people, they go in and they position those orders. And the reason why institutions may not use stops, it's because a broker will not going to manage those stops. It will cost so much to an institution to call their broker and say, hey, you know, say the person's name is Jen. Hey, Jen, I want you to cancel all these orders because market went down, so we no longer want to stay there. Every time a broker cancels an order, it could cost them a lot of money. I have a friend who does this for a living. And if you even ask a broker to manage those stops, they may not be able to do it either because that could cost a lot of money. So what they do is, if those lots, say you have, you're Chase or whatever institution, and you're a bank, and say you have so many orders here, and only from that order, only 50% of those lots are activated and you're actually selling. That's great. The rest of your orders will sit there. You as a retail trader figure out where those orders are sitting there. So by looking at the price action, identifying those bad, okay, good, bad, you know, this is also bad, identifying these areas, you're knowing where these banks, these institutions position themselves. They position themselves here, again, to be a second-time seller. So when the price gets there, most likely it will sell again. So think about this on a bigger scale, okay, in a micro scale. Now, when you're listening, L, okay, go back to the trade room. And if you haven't listened to L enough times, go back and purchase those replay files. Watch him explain, okay, back to back every day. Say you have 2 bear bars, right? 2 bear bars. Think of this, okay, and then you have bear bar, bull bar, another bear bar, another bull bar, whatever. Then you get these bear bars. And they're actually kind of gapping down. So what is this? This is that breakout. This is that bad price action. But it's actually a stop order market. Limit order market turned into a stop order market. Then suddenly you have a pause here, aka pullback. Maybe you got this bull bar, right? What does L say? If you have these 2 beautiful sell the close bars, chances are there are limit order sells waiting right here. So instead of buying this pullback thinking it's going to go back up here, chances are these bears are going to actually get another leg down. They're going to sell above things. The pullback can be 2 bars. Pullback can be 3 bars. Okay? But eventually you're going to get that sell either above those bull bars and it's going to sell. Now that's a pause right there, which is this area on a bigger time, bigger time frame or bigger scale. Now when the market gets back there, you can still sell that because chances are there's sell orders. But that's a secondary sell, okay, zone. This is the primary. When market gets back up there, that's where you're going to sell. In fact, it can actually sell twice. So that's where the confusion comes in, and people don't understand, how does that work? Why does it go for twice there? Or why does it sell so much? Or what is that middle area? Think about the limit and think about the stop order market. So stop order markets is where you get those impulsive big bars. And the limit order market is where the market is getting ready to break out and turn into a stop order market, okay? And there are tons, it's a packed area. It's a balance zone, it's a packed area, okay, with so many orders, even though it looks insignificant, but it is actually a very significant area. Now look at it. 1, 2, big bear bars, right? Let me make that bigger so you can see. Now take a look at here. Big bear bars, right? Same thing that I was just explaining. Look at this area. Why didn't the market continue up? Look, it could have gone that way, but it didn't. What happened? It actually reversed. It rotated down. So now look at these bears. Came all the way down here. Now, same thing I explained for the bears, it's happening for the bulls. Bulls bought here. This tiny little area was a balance, and it broke out. When the market gets back here, do you think it's going to bounce? Yes, bulls try to buy right there. You see that bar 2? The height of that bar 2 is your buy zone. And indeed, they try to buy, but the problem is they failed to break out twice. So that means these bulls are actually weak, and they may not be able to actually go furthermore up. But look what happened. These bears who sold here with this too impulsive, I'm doing this on a micro level, okay? They ended up selling here. So that means bears are in charge, sellers are in charge of the market. In fact, they're making now new lows. But eventually this is going to go up. Now you're looking to sell. If you're trying to buy this, know that somewhere around here there is a sell zone. Chances are there's sell orders waiting. Maybe 1 point, I start the sell 1 point below that zone, or I have sell orders inside that zone. Chances are it's going to sell to test these lows again. Okay? So when you're buying, you have to ask yourself, institutions position themselves to sell with a second leg down. Most likely there are sellers here. If I buy into this, and if my stop is here, am I vulnerable that this may go back and test the lows, hit my stop, kick me out, okay, on my position, and then I am forced to go back in, which you aid the market to create massive move up. So they use you, okay, for their benefit. Okay, that's what it is, running the stops. That's what the institutions do. So instead of buying, just wait to see what the market is doing. If we're not going above this level, that means we're coming down and we're going to test the lows. Now, this is a secondary sell zone, but the primary zone, sell zone, is right there. Look at that. Market goes up, and here's a reaction. Now, generally, these areas are fresh. They will sell twice. Look at that. Look at that sell. Look at that beauty. If you sold right underneath that 48, that pin bar, that is a 27.5 point run. So you need to understand these levels because limit order, okay, sells are waiting right there. Limit order sellers are waiting. Limit order shorts waiting. Okay, sellers are waiting. And that's what it means because look at this 2 bars. On a micro level, look at this 2 bars. So you think they're going to buy it just because there are 2 bull bars? It might be going up. Maybe it's going to test this or here. It may not because limit order sellers are sitting right there. Just for the bulls, look, 2 bars, 2 bars. Where do you think the limit order buyers are? Probably right around there, right underneath 24, right in this vicinity looking to buy. In fact, they did buy. It went up and tested the highs, but it couldn't close bull bars. That means these bulls are not doing well because there are sellers here. So what they do is they break even. So if you were a bull and you bought that close and you're not seeing any bull bars, you're going to buy again, maybe above that bar, maybe underneath somewhere to break even. Okay, so we go to the close of that bull bar or to the highs, we break even, we get out. If you don't get out, you're going to be stuck in this 2-legged move down trying to test the lows. Why is it testing the lows? Because there are stops there, there are buy stops there, there are sell stops there. There are a ton of institutional orders there. Other institutions are trying to tap into that liquidity to create this move up. Okay? So this is the whole concept of trading. Okay? That's all there is to it. You get it on a bigger scale and you get it on a smaller scale. So hopefully this helps you guys. And I'm going to go over this more and more. But I'm going to call these areas buy and sell zones, not supply and demand zones. Okay, I don't want to confuse anyone. There's a whole support and resistance section in the BTC course that if you go watch those videos, it'll make all sorts of sense. Okay. Okay. So yesterday, FOMC. Hang on, I have the news blasted in my ear. Very interesting, but I want to show you guys something. Okay. We are stuck in this trading range. We started right here. We're inside another trading range. So there's a trading range lows. There's a trading range highs. okay? And look at this. Look at that big impulsive move, pause, impulsive move, another pause. Look at that huge gap. What do you think is there? A sell zone, right? So there's a sell zone right there. Look what the market did. Went right there into that sell zone, activated all of those orders, and came down swinging. Look at that. So when things happen on 5-minute chart, it's not just because it's a manipulation of a bunch of institutions knowing what they're doing. It's because also all technical. That's why Elbrook says, I don't care what the news says or does. I'm going to trade what's in front of me, what the chart is saying. So if you master those supply and demand zones, support and resistance, okay, you're going to know that they sold here before. Most likely they're going to sell here. Look at that big impulsive move down, okay? And that's where, and above this area, that's where the stops are sitting. So in order to create this massive move down, not only we have to go activate a bunch of institutional sell orders, we also in the same time run a bunch of stops there. So when the stops are run, many people are kicked out of their positions, many machines are kicked out of their positions, and then there are actually sell orders are activated. That creates a frenzy, and that move, that's what the institutions want to see. Move the market fast, big, and make quick money in short amount of time. Okay, so hopefully this helps to new traders. Now here's another, and I said during the live session I said, be careful, this is a sell zone. I put a red, okay, box there, and I said there are probably sellers waiting there. Now there was a gap here. I expected this to be possibly a buy zone. We would close that gap. Maybe there are buyers, maybe underneath. I put a bunch of levels, green levels, and then I said, but there's also buy zone right there. Look what we did. That is a big FOMC candle. The candle was really big. I mean, it was a important news. I mean, we're already dealing with inflation and we're dealing with all. So it just, fundamentals aside, technicals aside, fundamentals also played a major role. Look how big that bar is. But look what that bar did. Eventually, it ended up coming down to that buy zone, and it actually tested underneath. There are institutional buyers or buy stops are waiting there. There are also stops that these buyers have. So there's a slew of people are getting kicked out of their positions, and there's a slew of people are actually entering to buy. Now, this is the first entry sell. Bounces. Second time, they try to sell. But look, we did not make new lows. We did not make new lows. There are also other traders selling this close or underneath, hoping to go short, but they're getting stuck. So when they get stuck, they're going to sell somewhere, maybe at the 50%, maybe at the 33%, maybe at the 66%, maybe all the way up here. They're going to sell to break even somewhere. So they sold. Now look at this. This is an impulsive move down. Think of this. If I actually go to a 2-minute chart, you don't see a one impulsive move there, okay? You see two legs. Leg one, pull back. Leg two. Where is that pause? Even if I go to 1 minute, here, I'm trying to show you that pause, okay? So, which is right there. Do you see it? Look, that bar, 272, is the pause. So if you actually, I'm going to measure the body. So this is the actual primary sell zone. This is the secondary sell zone. This is where institutions are pausing to sell with a second leg down. If you're buying this hoping a full reversal back up, you're doing yourself, okay, not a favor, because there are sellers waiting there, and those sell orders will be activated. And those who got stuck here, okay, most likely to sell there to come back down and break even. When we cannot make a new low, where will market go? The other way. So we did not make a new low, and market started to go the other way. In fact, we made a higher low, and we finally reversed. So when market sells here, okay, look, they try to sell for the second time, right? Second time. Or you can take the entire bar 272. They sold smack in the middle of it. Here, I'm going to do this the right way since we have time. because I know you guys are getting dizzy with my lines over there. Okay, so I'm measuring that bar 272, and I'm going to mark smack in the middle. I'm eyeballing. That's the middle of it. Okay, look where they sold. They sold right in the middle, and then they sold closer to it, right? But they sold, second time they sold. But they could not make new lows. No new lows. That means this is event to break even. Those bears got stuck here. Once they get out, you see these big bull bars and a continuation. And then now we're getting towards the high. So that means buyers are coming in. You either enter to go long or you wait for a pullback and then you buy that slingshot, okay? That basically this was a slingshot, but really it's just market is pulling back to go higher. So you buy that pullback. It's also what? A bull flag. Now you look for a bar that breaks that high, okay? This bar did break that high. That means it's going to go clone this leg to the upside. So it's a measured move, okay? Now, what happened here? Well, you might say, well, this is a trading range highs. Yes, that's one way to read it. But where will you sell it? Well, squeeze your chart. Look at that. Market made a wedge, exhausted, and then impulsive move down. So somewhere there, we have a sell zone. Look at that. Beautiful sell zone activated. What am I looking for? A pin bar, or maybe even two dojis. I do see dojis. To me, this is a doji. The wick is almost the height, almost the same size of the body. Well, that's a doji. Two dojis side by side, and in a sell zone. I might just be inclined to put a sell stop order right there, and my stop is maybe right there, and I'm hoping to get in. I get swept away, and I'm going places. Okay, so that's all there is to it. I don't care about the news. This is what I do. And I do this on a micro level too, in a tiny little areas. It's the same concept. It's just in a micro level. So hopefully this will help you guys a little bit. Now I want to go back to the 5-minute chart. And okay, so we were stuck in here, but still it was a good price action all in all in the morning. And we gapped up. Okay, we're testing certain highs, which was yesterday's high, but we couldn't get up there with a bull body. Then I said, I think we might come down and overlap with that. But bears tried once, failed. There's no second follow-through bar. So then I start to say, okay, if the bears are failing to get continuation to overlap with bar 76 to close this gap, that means bulls are trying to keep that gap open to go maybe to these lows, okay, test those lows, and then make a wedge. Then I'm going to look to sell. So I'm not inclined to sell anymore because I see that the bulls are trying to go further up. And we had a magnet also here. So here's the first pullback, second pullback, and a third pullback. I've got a wedge. Now I have a 2-bar reversal, bar 13. You can put a sell stop right underneath. You got to put your stop here. Then you're going for 1-to-1. So there was a conversation in Discord last night, late night, and I thought the conversation was going places. Some people were trying to answer other people, but they were not answering the question. So I ended up stepping in, and I tried to answer the best way I could. Now I want to demonstrate for those that looking for 1-to-1 or 2-to-1 risk-reward trading. So when I'm trading, I don't really care about the 1-to-1, the 2-to-1s. I look for, am I going to make that 5-point and then that 10-point? And then if market goes beyond that 10-point, I could be in a mini swing. So the swing is generally 20-point, but the actual swing target should be 40-point. So when you're swing trading, you need to be able to get more than 20 points. If market is moving 20 points, to me that's a swing, but it's a half trend, okay? And it could just stop there and not go to the 40-point. But my whole concern when I'm trading S&P, am I going to make that 5 initial point, scalp, and then can I get continuation for my trade for 10-point? Because if I trade twice in a day and make 2 10-point trades, that's a 20-point trade a day, okay? So if I'm trading with one contract, it's $250, $500, 2 trades. If I'm trading with 2 contracts, I can walk away with $1,000 every day, okay? So what does this mean? Market made a wedge, so I knew the sellers were going to come in, and there it is. There's a 2-bar reversal. If I sell underneath that bar, my initial reaction, I'm looking for a 5-point trade. That's it. I scalp right there, and what I can do is I can scalp and bring that stop from up here to maybe above that wick, okay? Because now I'm expecting market to go 10 points. Okay, we came so very close to the 10 point, but not necessarily tagged it. We ended up making 1 tick short. I mean, whoop-a-doo, right? So I'm 1 tick short. I couldn't make the 10 point, but I made this, right? And my stop was up here, lower down. I'm still safe, but I still made more than 9 points. All right. So, but if you did sell this far, and if you were a risk reward, and you sold 1 tick underneath that, right? So where did you sell? If that's 96, 95, 75, you entered. Now you put your stop, say 1 tick above that high, bar 13 high. So your stop is right there. You're looking for 1-to-1. That is your 1-to-1 right there, 86.25, which is right around there. Instead of 9.75, 9 points and 3/4, you made 9 points and 2/4. Same thing. I went for 10 points, you went for 1-to-1. Now, you are a 2-to-1 risk reward. Did you get that? No. Why? Because look at the risk. Risk is big. Okay, so you're risking a lot, because if you measure from there to there, you're risking just about 10 points. 9.5. That's a lot of risk to me. And you're trying to make 2-to-1. Good luck with that. So you might want to, that's what I was trying to explain last night. And listen, you know, there are times you're going to get 4-to-1 targets. There are times you're going to get a lot more than that, 10-to-1, 8-to-1 targets on S&P, but that's swing, you're swinging. Now, I don't look at those 1-to-1, 2-to-1s. I do look at 1-to-1, but mostly I'm going for 10 point. My 1-to-1 should give me 10 points. But one measured move target, the 1-to-1 that I look for is actually a measured move target. That's the one that I'm interested. So if I actually see this, okay, if I see a break below the neckline 20, I have a double top. I'm going to take this as, okay, my target. Now, market came down to my target, okay? If I put a sell stop underneath that low, or I can take this, and this was my actual target. Now, when the market is going down like this, sometimes I do look for 2-to-1 measured move. Check this out. Not only I got 2-to-1, which was closer to the prior low, it actually drifted way below, but then again, this is news related, so volatility is high. I think the ATR was over 30 points at that time, so it was overshooting. But if you're getting 2-to-1 measured move target like that, you're golden. You've done it, okay? But that's not what I apply to regular, okay, trading on a micro level. So hopefully that explains a little bit. All right, market is open, so I'm going to talk about the daily chart a little bit real quickly. I have some levels here. So I've been holding this area as area of interest. Once yesterday, we were hopeful that we were going to actually break above this September 6th low. We kind of did, but we did not get continuation. And then the news event happened, and we ended up selling. And that's when I said, I think we're going to come back and test this low. But look, we are still inside, okay, this level. This is still area of interest. We have some equal lows here. Market could sell to test those, okay, or it could go up, or it could reverse. But if we do sell, this is the area, and this is the area I'm interested. We could still sell, but we might need to pull back. Now, where did those levels come from? Look left. Look at this area. This area, to me, is important. That's the one that I measured. I mean, I marked, okay? And then this area. So if we do sell, okay, first market needs to pull back to find some sellers at certain levels. We have a channel here, okay? So if you actually, I can take that, or I can take it like this. the point, right? So we breached from the channel, but immediately came back down. We have no bars closing outside. So on the daily, market can go up, which we want to go up back to the September 6th and then break above it and go to the 4,000. Where is 4,000? 4,000 is right around here, which is the top of the channel. So if we do reverse without coming down, or if we do come down, breach, test, and then reverse, I'm going to look for price coming back here, maybe trying to sell again. But this is on the daily, so I'm going to keep it here. Same price action theory applies to here. Look at it, right? So we have a channel down. So I'm going to, maybe I can take this. So can market actually continue to sell down? We gap down, but we're at certain lows. It might. It's already doing that in here. But if we do reverse, sellers are waiting here. Sellers are waiting there. Okay, especially look, there is a breakout test area. So we could, by the time we get there, there may be a ton of sellers here wanting to sell this further down. Okay, so I'm going to look to see what market will do here. On the Globex chart, overnight, we ended up going back up. Now look at it. It's the same thing actually did happen in a way. So if you actually take this channel, okay, or the breakout test area, they try to get back up here, but look, that's another breakout test. They just tested that area and came down, okay, in the UK session, EU session. So now we're going sideways. Two things can happen. We can sell and test these lows, maybe a little bit further down, and then reverse back. Or we can go back, okay, make this reversal pattern, and then sell, swing down. Or we can come down. So market is deciding. We're smack in the middle of this Globex session. It could come down right around here. Look, it went up. It might came down a little bit. That's the apex. If we break that apex and come down, we could finally reverse back up. But there are probably sellers waiting there yet again. So let's see what happens now. We are way too bearish. Now on the hourly, yesterday I said, okay, we bounced, but we left this trend line open. We never tagged. You see that? There was a failure, and then we went right back to the sell zone. Okay, also the breakout test area once, twice, and then they sold. At the end of the day, we not only tagged that, we breached below. I put these arrows and I said, we're going to test this low, and we might even breach because this is the target. This is where the bears are trying to come in. We might even go further down here and then go back up, but this is where they're trying to go. So I'm no longer interested in that. We are way below the last week's low, so we have some targets still, their targets. We're gapping down. But we're on the Globex chart, we're in some kind of a trading range. Now, I do have a lower high, okay, double top, lower high, and a neckline. Now, if the bears break that, we're going to test 85.25. If we start to break below that with bear bars, we're going to come back and test the Globex low. Can we go back up? Yes, we need to start building bull bars. And then there's another neckline right there. Then bulls are going to try to test that neckline, maybe go back up to the Globex side. So it's trying to decide here what it wants to do. But look at that channel. We're right there. Bears are trying to break that, but be careful. We might go test the Asia high, which is right there, that gold line, and then bounce there, or we might bounce right here. Because look, there's also support here. But buy zone is right here. This is where the buyers are waiting. So if we do come down, this is where I'm going to look to buy. at least. So I'm not ready to buy yet. Gap down. But look how that area is still holding. It hasn't really violently broke that channel low yet. I'm watching the Asia high, this golden line. And then the midnight open is magnets. And then the below midnight open, we had major buy orders. Look how much the market moved from that area. So we might end up coming down, testing, and bouncing. So because we were so bearish the day before, it is okay to expect some kind of continuation the next day. But eventually, we're going to go into some kind of trading range. So let it sell a little bit more into 3784 area, 8483 area. And I'm going to look to see if we can actually go down and test 82, 3782, and then bounce. And even on the daily, we're holding right at the bottom of that channel, right? Because this is an area of interest. It was a balance zone. It was a tight trading range before. So market is deciding what's underneath, if they can run some stops there maybe before going back up. Or it's going to keep selling. But it's going to reverse. I just don't want to sell, into something that is support and the buyers might be waiting. And that could be somewhere around 84 to 82 area. Maybe a little bit further down, I'd say 81.80, but it's going to bounce. Now, ATR, we're still very volatile. It's 9.5. So the bars are, average range is about 9 points. Now, on the daily, we'll see a wedge. 1, pullback, 2, pullback, 3. And they want to reverse it. But we need to see some kind of, good effort by bulls. If we don't see that, it's going to be difficult to buy because we might come down and test this area and that area still. So I'm still looking to see if we're going to actually have an attempt to reverse here because of this wedge. They were buyers here before. They were buyers here. That makes this entire area buy zone. And it stops here. So naturally, market wants to test those lows to see what's there before going back up. And Al talked about market coming down and testing the June low, okay? And it's still possible. So I'm not in a hurry to just buy yet. This is still continuing down. There you go. So we're just testing. We should come down a little bit more. If we start to close bear bars underneath 37.85.25, we could continue. I need to check my data connection to make sure I'm not behind. We could continue. I need to check my data connection to make sure I'm not behind. No, I'm not behind, so I'm all sync, so that's good. Okay, so we're coming into an area buyers might be there. So I can adjust this channel, but I don't trade with the channels. I just wanted to show you I can adjust this as it goes down. I just wanted to show you I can adjust this as it goes down. but I don't really care, so I'm going to remove it. I just wanted to show you guys what's happening there. Now we can go another 5 points. Let me see. So 82. But we're testing the area that I talked about, 82 to 81, maybe 80. So it could go another 5 points down from 82. So somewhere around 77, 78. We might get a reversal or somewhere here, I don't know. Okay, they're still selling 5 extra points. It could be 10 points. Here's where I'm getting it from. Okay, from this pivot on the ETA chart, I'm going to take it from there. Market moved more than 40 points, okay? So it can actually go, although the high is not that far, so I'm going to measure from that pivot. So here's 40 points. It could go 5 extra points. So 45 is right there. So they're trying to reach that level. But this is a trend. Now, it can go even all the way to 50 if it wants to keep selling. But let's check out what they're going to do at the extra 5 point. So it can still sell into 76, 75, 77, I said earlier. But it can just reverse from there. We're getting the continuation at the open because of yesterday's price action. We're going to get a trading range and a rotation most likely sometime either hour and a half or 2 hours from the open. So just that will happen most likely. Or we might go to those resistance levels and then sell from there yet again today. So it may not be a full reversal. All right. So we did come very close. This is the high. And 78, I said 77. But let's wait a little bit because there are 2 strong bear bars. There might be limit order sellers wanting to sell that bar's high. But I did say there will be some kind of reversal here. We're going to bounce. Now, can we actually bounce hard and go up to this bar's low? ATR is 9.5 points, so we're moving very fast, almost 10 points, or to that low. But I think the market is going to try to sell this bar and try to come down to here, maybe even extra 5 more points before finally going back up. So I would not be too excited to buy anything here, like I said. At least wait for some kind of bullish traction. Look for 2, 3 bull bars closing mid and on their highs, mid levels and highs, if you want to buy, but there's nothing to buy here. Now, if we start to build above, bull bars above 37.85.25, then I'm going to say, okay, on the 5 minute, I'm going to start looking for some kind of, 3 bull bars back to back to see some kind of momentum building. But bears got the target on the hourly as it was marked yesterday for you. I mean, I marked it Sunday, so Monday, Tuesday, Wednesday, Thursday, 4 days in a row. These levels were in front of you. We might continue to sell into this area, this green area, which is a buy zone. So I'm not really excited about buying this bar. And I'm not a bottom picker, so this is basically bottom picking right here. It's not the place to be a buyer. Which broker's chart is a reference for? I'm not sure what you're talking about, Solar. I'm so sorry. I don't use TradingView, so I didn't understand your question. You're probably asking something so basic my mind is not comprehending. Sorry. If anybody can reply to Solar, that'd be great. Somebody got it. We are closer to Globex low. Okay, I just want to show you guys that 77. We're gonna hit that. In fact, we might even come down to 72 area. So let's see if we can actually tag that, and that was my target, 77. And then it can actually come all the way down, additional 5 more points around 72. So can it actually reverse here? I still don't think it's a good idea to buy it. Oh yeah, I'm not sure. On the Thinkorswim, I can answer the question because I have an account with Thinkorswim, and that would be Zzw.22. But TradingView, I'm not sure. Someone else is going to probably help you better. All right, so 77. All right, good job, Bears. Now they should continue. Can they continue? They need to, let's see, 79. ATR is 8. We should be able to get to 72 area, but we met my target at extra 5 points after 40-point move, so they're taking profit. Now, if they do, if they cannot close, have another second bar. Now there might be some sellers here, but at this point the target met. This is an additional drift, extra 5 points. So many bear bars. If you're buying this, it's probably a minor pullback, and there might be sellers again, okay, waiting somewhere up here to sell this one more time. All right, so let's see. I will get serious about bulls if we start to close above 37.85.25. I don't see it, so I would assume we're going to try to sell into 72 area, 37.72. Maybe even 71. ATR is now even bigger. So I would say possibly 71 to 70, a little bit further below. But I'm going to make sure I scalp 72. So let's see. The bar hasn't closed yet, so I don't know how it's going to close. I'd like to see bears sell this. I don't know how it's going to close. I'd like to see bears sell this. A little bit further. I'm going to switch to the RTA chart so you got your levels there. Okay, so somewhere around, what did I say, 72. I'm going to mark 72 to 70 area. Bars are getting smaller, bodies are getting smaller, and now we're getting bigger wicks, but we should tag this area. Fails, then that's fine. And that's because this area was a buy zone, but I like to see a little bit more continuation. just processing so many orders here, back and forth, back and forth. I got it from here. I'm looking for additional. After 40-point move, if the market is still in some kind of velocity, okay, selling, it can drift 5 to 10 points extra. So 77 was the first target, and we're kind of stuck there. You see, we have not closed the bear bar underneath. Can we get down here? Yes, we could come down to 72 or 72.25. I think 72 is the 50-point. So I'm looking for continuation for bears to sell a little bit further before reversal. But they met my target. That was the 77. I'm just looking for a little bit more continuation because ATR on ETH is 8 points and an extra quarter. So I'm looking for a little bit more continuation to 72 because ATR is 8. So if you take out 8 points from 77, that's actually 71. So, I mean, not 71, but we could just come down a little bit more, right? So that would be 69, somewhere here. I'm just measuring 72 as round number 50 points because 40-point moves can get additional 10 points before bouncing. All right, so I scalped a little bit at the 75, and I'm looking for continuation into 72 and 71, possibly 70. It's probably going to overshoot it. Might even come down to the Globex low. Okay. I mean, it came so close. Look at that. That's in the vicinity of 10 points, 73.50, point and a half. But you see where I'm going with this? Bars are getting smaller now, so therefore we may not reach it. But we have drifted additional points. In fact, it's 8.5 points we drifted from the 40 points. So that's still a good drift. Anyway, I'm out because it moved up so much. I already scalped out. Now, I'm going to be patient. Can they sell again? I don't know. If this bar closes strongly bullish, they're trying to get the first entry long. I probably still wouldn't buy it. I still would wait to buy because they still have these targets. We could still come down to here, okay, before going back up. Okay, before going back up. All right, so they couldn't close a bull bar, and bears got a doji, so this can still come down. If I get 2 dojis, then you know what I say about the dojis, right? They can be good reversal signals. And we're kind of in the vicinity of we might bounce, but I don't see a bull bar, so I don't care to buy. So this is still trying to come down to my target. But I'm out. I did not like that bull bar, and my stop was right above it, so I didn't want to get hit, so I kind of acted too early. The ATR is too big for me, so I'm trying to scalp in a buy zone with continuation, so I got out. I got what I needed, but this is still trying to continue down. So if you're still in your short hold, we should test the 72. Let's see if we can make it. We might even overshoot underneath a little bit. Oh, it's making micro double bottom now. Let's see what they're going to do with that bar. It came back to exactly where I scalped, but it's not going further than that. So if I didn't scalp and I was still in my short, see, it's still bouncing. All right, so they made a new low. That's good. I'd like to see these bears continue. But there is also, you see this 1, 2, and 3? This is a micro wedge right here. We were down, up, and down. I mean, we could suddenly reverse. Be careful there. Wait for this bar to close. It will probably go into, because it made a new low, went beyond that low of that doji, it should tag my target. What did it do? 72.25? Yeah, it tags 72.25, which are originally marked, but it's really the target is actually 72. It may continue down. It's on the hourly. We have a little bit more room to the buy zone. And Globex low is right there. We have a area that buyers were very strong in the Asia session. So we might come back and test again this area. So 72 should be in the bag. And then it might even go further beyond that. Just comes to it and just bounces. Are you kidding? That 72.25, they're just, nope, we're just not going to hit that. We're going to make a liar out of you, Rose, because that one tick gets you. I guess I'm a liar, I don't know. It just didn't hit my target. That'll mess with your emotions for sure. Oh, there it is. Okay, so they just tagged the 72 and they're bouncing right at the 50 point. Now, if they do close bars beyond it, then I'm going to start the count, okay, 10 points. So that's 15. So that's 10 right there. Okay. And if they close a bar beyond the 11 point, right around here, say 11 and 75, three ticks beyond 11 point, okay, they're going to come down to the 15 point scalp area. That's the new zone for these bears. But I don't see it because I said somewhere here we're going to bounce, and we just did 72, exactly where I measured. Now, if this bar, they're taking profit now, we somehow get a close right around here, okay, a bear close right there, this will continue to come down to either 1 point above here or right there. But first it needs to break, it needs to close a bear bar around 70.50 in order to sell. So I'm not ready to do anything because I know this was going to bounce here, and it just did. Okay, so 2 of my targets are met. They're taking profit. All right. So it worked fine. But this right here would only happen if we get a bear close right there. Then we continue maybe even into the 20 point. But since we don't have it, I don't really care. So I'm going to switch back to RTH. We're in the buy zone. So we tested the buy zone. We're bouncing. I like to see on the hourly move down a little bit more. But I'm watching what will happen the middle of Asia, which is right there, 50%. If we do start to move underneath that mid-Asia 50% and not able to close bull bars above 85.25, we're coming down here, most likely. So this was done. But I am flat at the moment. Now, we might get a double top with bar 5 high here. Be careful. If we do start to get above that, then we are going back up to most likely to bar 3 high. So there are sellers waiting here. This is possible double top, and we might have sellers right here. So be careful. Somewhere around 88, 37, 88 area. Sellers might be maybe even a little bit further up. And this is the high one from the lows. And market made, if you take a look at here, so you got 1 pullback, 2 pullback, and 3. There's a wedge here. There's a bigger wedge here. But it's still a tight bear channel, so it could be minor. So first I want to look to see if there's any kind of double top with bar 5 high. But the bar is trying to close really strong. We might come down a little bit and then go right back into this red zone. Limit order sellers are probably there waiting. So they're getting a little bit of resistance with the bar 5 high, but they need to test it. I like it to be tested. All right, so we breached it a little bit, but still you could see there was a potential a double top. But now if they do close a bull bar, this can continue into the 37.88, maybe even overshoot because the ATR is almost 10 points. So we might test well inside this sell zone. There's a bear gap there. Up until here, we didn't have any gaps, but we do have a gap there, so sellers probably there. All right, so that's that double top I talked about. Now, if you take just glance at the Globex charts, look where the rejection came from, right at the midnight open. Bulls are trying to close above the midnight open to become bullish. Bulls want a second entry long. So it's above bar 7 was the first entry. Because it's a strong bear bar, if you buy 1 tick above that, you're basically looking for minimum 1 point scalp. You already got that. But the reason why you're not getting continuation because this is high 1 from the lows. So the high probability trade would be high 2, the second entry long. Okay. Some bears are looking at this as an opportunity to sell, and that's what that double top I talked about. So they're trying to sell it for the second time. They failed here. They're trying to sell again. So I will not buy it, and that's why I didn't enter long. You have to weigh in to see which one is a higher probability trade to go long when you're at the lows like this. Yes, we have a wedge, but look at the tight channel here, and it could fail. But if I wait and be patient for a second entry long, then I could make more than 1 point. Remember, scalper's profit on S&P is 1 point. Anything more is bonus. Okay, so we have a big gap down and a continuation of yesterday's price action. Okay, so we did come down with 2 legs, leg 1, leg 2, in a way. And we're trying to go right back to the EMA. Again, this was the early double top. I'm going to get rid of it. So now we're coming back up here. Now, we could actually reach the low of yesterday. And if we do that, we could end up getting the double top there. And if the bears actually after making that double top, keep that gap slightly open, we could sell right back into these lows once again. Okay, so I'm looking at this, scenario at the moment, or maybe this. Okay, we're in the sell zone. Let's see how we're going to react here. There is a gap here, okay, that bulls are trying to close and become more bullish. Gap is right there. That is the gap. Once that gap closes, there's more gap up here. They're going to try to close, and that's why I said low of yesterday we could test. But we could end up that bar 80 becomes the magnet, okay? That bar 80 is where possibly sellers are waiting. So the bulls are trying to get back up. Now, if we do make that double top at the EMA or a little bit below, we could still come back from there. All right, so this zone is not holding because of the gap, so I'm going to remove it. We didn't react well to it. I didn't sell because I would need a sell signal bar. Now, if you did sell, okay, that zone was, I should have not removed it. It was right around here. Okay, so if you did actually sell and it went against you, it's coming back to break even, okay? So say you put a sell order there, sell order here, maybe at the top, you're already making money, okay? So you are making money. Market is giving you what your money is worth or your trades, okay? You sold here, you made money. You sold here, you made money. You sold here, you made money. So we overshot it due to that gap, and actually bulls closed that gap. Now you made your money. Okay, you can either scalp or leave a runner to see if we're going to come down here, but I doubt it because you got two bars, 8 and 9. Now this could be still a minor reversal, but the bars are too big. So market is trying to become always in long. Therefore, it's trying to get back to the EMA with 10 bars and 2 legs, or 8 bars and 2 legs. Okay, so you have 1, 2, 3, 4 bars already. By the time we get back up here, we might get the 8 bar somewhere here, and we might make that double top and then come down. So bar 60 high is also target, along with bar 60 low and mid. Okay, somewhere here, the bulls are trying to reach. But I did say that that was a sell zone, so we're reacting to it. Nobody bought the close of that bar 9, and because I said it's probably a minor reversal, it's not really attracting. We might pull back to get a second entry long, maybe a higher low after a wedge. Is there a bigger wedge? Yep, there's a bigger wedge. I don't know if I can actually use this. Yep, 1, pull back 2, pull back 3. With an undershoot, not an overshoot, or you could say this isn't how I would get my wedge. So this is an undershoot, and you're going to get those, right? Overshoot, or overshoot, 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 undershoot. Those are wedge patterns that I look for. Okay, so we have nested wedges. Market is trying to become always in long, but after a wedge, you want to see some kind of double bottom or double bottom higher low to swing high. Now, we don't have that yet. Market is still reacting to that sell zone. I'm waiting to see how this bar is going to close. Sorry, I missed the questions here. I'm going to look at it. Do you have EMA 20 bar on the 5 minute? My EMA looks 8 points lower than yours. You mean the 1 hour EMA? Yes. I have the 5 minute EMA, which is this light blue, and then this dark blue is the 1 hour EMA. You can use 200 EMA if you like. Make sure that you're on the RTA chart, regular trading hours that exclude the overnight session. regular trading hours that exclude the overnight session. If you're using it on the ETH, the location will look different. Okay, so for example, here's ETH. Let me see. That's the ETH chart. If I put an EMA there, let me put an EMA there. That's where the EMA is on the ETH. And you said your EMA is under, or I don't know. So you see the difference? Okay. All right, so that sell zone is reacting just fine. Everybody who sold there is making money. It just overshot it due to that gap, but that's a good sign. You want to see these signs. If you want to go long, you want to see bulls actually closing some bear gaps. Now, they showed us their true intent. So what they want is, listen, this was your first entry. Maybe it is best that you wait for a second entry. Since we closed that gap, we're probably going to want to close more gaps above. So the bar 80 becomes the magnet. Now, bulls did close a strong bull bar above midnight open, but because market sold pretty strong at the VWAP, chances are first touch, there are sell orders waiting to be activated, and now they're selling. That's another reason. This is a 15-minute chart. This is a 5-minute chart. So you knew you needed to take profit there if you bought at these lows. Now, if we do get another bar closes above, if bears fail to close below 37.8525, then we might continue to go up. But I'm watching Globex chart now. This is also, remember, breakout. We're testing that breakout point. Also 1 and 2 bear bars. So this is a limit order market with 1, 2, 3, 4 bars overlapping. So machines are selling on the Globex chart with limit orders above anything that closes strongly bullish. So it's still bearish, and it's the same way that I explained why we had a sell zone there and why I would not buy against it with the first pullback. Even though the bars are strong, most likely it will come down because it's a minor reversal against a tight bear channel. So, but I'm still expecting bulls to make a run for the EMA eventually. But if they're not ready to buy it, I'm not going to rush to trade because I'm just looking for a $500, gain. Right? So I want to make a 10 point with single contract. So some sell stop orders underneath bar 10 activated, and market is trying to make that 1 point. If you actually measure, so if you entered 1 tick below, you are filled at 80.50. It needs to go to 79.50. I'm sorry, 79.25. What am I saying? 78.25 to fill you. Was it 80? Sorry, 79.25 was the first point. It's going way beyond it. So it moved 4 points. See, if you actually sold because market is down, this is the first pullback. Instead of buying, wait for market to sell again. So it's better to put a sell stop order right 1 tick underneath bar 10. Okay. Grab a 1 point and see if your runner runs. Market gave you about 4 points, I think, right? Maybe more. 3.5. 4 points. Yeah. So that's pretty good. That means if market is making more than 1 point with a sell stop order underneath certain bear bars after a pullback, that means bears are still in charge. But we are overlapping a bunch of bars. We are now in a limit order. Okay. Are there any bears stuck here? No, they already got out. there were no strong bear bars. Now, if they did sell underneath that bar or the close, and they were disappointed with this bar 8, they got a chance to sell at these highs or the gaps or the sell zones to break even. They already did break even. So I'm still going to wait for market to try coming down to there, okay? But if it starts to close bull bars, that means bears are sold once, failed, sold twice, failed, and then we suddenly get big bull bars. I'm going to buy, I'm going to scalp there, and I'm going to leave a runner to the EMA. So I'm still watching to see if the market has intent to go run towards the bar 7 close, and preferably to the low of bar 7. Now, if they do break the bar 7 low, that means market bears are not done yet selling, because they're making new lows and they're probably going to want to come down further. But I don't see strong. Look at the bar 10 and look at bar 11. If bar 10 is a good sell signal bar, why is the continuation is very weak? Yes, they got their continuation, bar 11, but all they got was a 4-point scalp. So bar 11 should have closed a lot stronger than a doji like that, okay? So that means this was just an attempt to get the stock bears out of the market, and then now, if they're truly out of the market, then you would expect this bar to go beyond bar 11 to give you the second entry long. Now, would you buy one tick above 11? It's a bear doji. I don't like buying above bear bars against big bear bars like bar 10. I'm sorry, yeah, bar 10. So I will wait for bar to close. First go one tick above bar 11, and then I will wait for it to close strongly bullish. Then I'll make my decision. Now, if I do jump in, I will take profit at the high or the open of bar 10. See, if you entered before the bar closed, you would be in trouble, right? It just went above it. So if this is a bear bar and no one's inclined to buy one tick above it because they know there's a potential of getting trapped there, better to wait for bar to close. Bulls will show you their intent, their true intent, okay? If they are actually want to go back up and this is a good higher low to buy, or if they bought here and they want to move their stop underneath 11, they're going to have to close this bar, okay, strong, because once they do that, more bulls will jump in, because this is a good place to put a stop, then put a stop down here, okay? Because they know those who actually bought early, the machines who bought early here, or at the close of that bar with a tiny little risk, they're going to want to move their stop here in hopes of swinging higher, possibly to the EMA. So we're still looking for a 10 bar 2 legs. First leg, maybe we're looking for a second leg. So 1, 2, 3, 4, 5. We might get additional 5 more bars to get back up to the EMA. But first things first, bar 12 needs to close now on its high to attract more buyers. It already went one or a couple of ticks above bar 11, so that means potential second entry long. A weak one, but it'll get stronger as this bar closes on its high. So they entered. So did I, and I scalped, and I left a runner and see if it's going to actually run towards up here. Yes, we are still always in short. We are still below the EMA. We're still bearish. We are still below the Asia Midnight Open. So I got out of my runner. It moved too much to kick me out from my break even, so runner didn't run. I literally made with the runner only a 1 tick gain. That's fine. That's what the runner is for. It doesn't have to run. I would love it to run always. Always and always. But hey, it doesn't run, and that's what the break-in and stop is. So It's still always in short, yes, but I'm still looking for some kind of reversal back up. Now, if we start to take out these lows, then yes, then we have a potential of coming out and taking out the bar 7 low and making new lows, and then we would end up coming down to Globex low. But look what's happening here. Okay? So those who actually bought one tick above bar 11, they made money, but they're scared because their stop is probably either 1 or 2 ticks below the bar 11. So I'm still expecting 10 bars and 2 legs to EMA or to these highs. Bulls are still trying to get their second leg up. Next scalp will be right at the close, as early as right at the close of bar 10. I'm sorry, open of, what am I saying? Open of bar 10. So they're going to try that, try to tag right there. See if they can. Bears are trying to prevent, because if bulls go there, most likely they're going to try to get to the EMA. But bears will try to defend the EMA, and they will try to keep the gap open. Now, there could be a wedge there, other than a double top with that. There could be a possible wedge, 1, 2, 3. So that's why I think the EMA is still, even though it's always in short, it is still. Why do I say that? Now, the reason why I maintain this Globex chart with extra bells and whistles to show you what I look at. How do I decide that? This actually gave me a $300. This little move, I entered again, even though I exited, and then I jumped in again and gave me a $300. That is a great scalp for me. But why? Look at what's happening here. This midnight open, I religiously put it on the charts for a reason. When the bulls are above it, they start to close above it, and the bears are not able to close below it. Chances are we're going to try to keep going up and up and up. I will become more bearish if I start to see bear bars closing below it. We're still hovering there. So we're still going towards the magnet. So I played into that. Yes, it's difficult, but that's a higher low, and that's the second entry long. Now, if the bears actually close this bar 13 on its low, that is now an outside down bar. Its low is lower than the bar 12 low. Its high, it's higher than the bar 12 high. So then I will say, okay, I was wrong. Bulls are not ready to get back up there, and the bears are still defending the high of this bar. Okay. So what are they going to do? They're probably going to want to come down here and test these lows, and in hopes of breaking down and running some stops that these bulls actually have. But I don't know that yet. So we now have inside, outside, and possible inside, 12, 13, 14. Right? So we have a breakout mode. Can the bears actually break out to downside? Yes, they can do that. It's a limit order market, so they're selling above bull bars. And let's see if they can actually buy a bear bar now. Now, I don't see a strong bear bar to buy under. Okay, so is there some kind of magnet here? No. Where is the strong bear bar? This one closed a little bit below its mid-level. Maybe that's the one. But I don't see it. Bulls are still trying to maintain their stop, so they're buying as this comes down. To maintain their stop, so they're buying as this comes down. There's a triangle here now. 1, 2. So 2 touch and 2 touch, and we need 3 touches. So this might just go up and down. But we're now a little bit more bearish on the higher time frame. You see that right here? If that bar closes in 8 minutes down here, we're going to break out. to the downside. In fact, we could still come down to here on the hourly chart. So bulls couldn't do any well with 12 bar 12, so I was out. I quickly scalped and got out. There's a micro double top there. There's a neckline here. So bears want to go back and test what's underneath bar 11. Perhaps come all the way down to the low of bar 8 because they want to break down. We are closer to the Globex low, so that's still some kind of magnet, but where is the breakout? Where are the strong bear bars? I don't want to sell something that is not ready to sell. Bar 13 is a nice bar, but I mean, it's not really that nice. It's just, you know. But it's an outside down bar, but it didn't really close down, you know. It's a doji. It's an IOI. 12 is I, 13 is O, outside. And let me check something there. I can't really see. Is this now? Yep, this is on the same level, so that makes bar 14 inside bar, I think. Yep, that's a micro double bottom. So because the bar 14 low did not go one tick below the outside down bar or outside bar 13, bar 14 is still an inside bar. So we could get a breakout, okay, to the upside. Still, if they close this bar on its high up here. But because it's a limit order market, there will be automatic sellers wanting to sell the close of a strong bull bar, and they will at least try to make a 1 point. But look what's happening here on the Globex chart. Again, this is important. Bulls are trying to prevent bears to close a bear bar underneath midnight open because they know if they do it, we could end up coming down here. So they're trying to prevent that so we can go back above these levels. Because this is the second time bears are trying, and bulls are trying to fail that second time sell. That was the first time sell, pull back. Second time fails, bulls are going to come in because they tried first time. Now they're trying to buy second time. So, and that gives us this mess triangle. We need 3 touches on the trend lines, and I did say that we're probably going to go back and test that. And here we are. Well, it's very difficult to read. I mean, you're stuck in a trading range, so I don't blame you, Maverick. I mean, I'm reading this out loud, right? So I have to do it. And because I have to convince myself not to enter a trade in this mess. But the only thing that I'm paying attention at the moment is that, actually 2 things. On the 15-minute chart, we are below and around the midnight open. Market is trying to decide. But look what's happening on the hourly. We still have a bear body below that level because this is where the buyers are, okay? And we could still sell. So I'm watching what the market is doing. So is there a triple touch here? Maybe yes. Nope, now we have. But we don't have a triple touch. Or was this the third touch already? Was this third touch? Are we going to squeeze right out of it? I don't know. I don't see bear bars. I can't really sell. The only thing that I can do in this environment, you see this bar 12 strong? You can sell above it. Is there a strong bear bar? I didn't see this very strong, but it's still closed below its mid-level. And then there was another one. So machines both below that bar anyway. So it's going back and forth, back and forth. Now, all I'm seeing here is on the 5-minute chart, there's a triangle. Triangle is a breakout mode, right? Until we break out, we go back and forth and back and forth. I also see I, O, I. Bar 13 and 14 lows are identical, so that makes 14 and I inside bar. So we're stuck. So don't be hard on yourself. This is not easy to read. I'm going to grab some coffee, be right back. Sorry about that. Clicked on the wrong button. All right, I'm back. All right, so we still don't have any breakout yet, but we do have 1, 2, 3 touch. And I think the bears are now trying to squeeze right out of it. But look at the Globex chart. We now have a very strong bear close. So bears are still trying to sell this. That's the second try. They're still in their second try. But you can also see the limit order market. So what did the buyers do? What did the machines do? They bought right underneath that strong bear bar close, and they're trying to scalp the 15-minute trading range, the limit order market. So whatever price action reading here also applies to here. All right, so I'm going to wait to see if buyers are going to step in one more time, because we do have a clear trading range here. Okay. Now we do also have a micro wedge, down, up, down, up, down. Okay, so there is a micro wedge. Now, can the bulls come in and suddenly go right back up? I don't know. We'll see. Machines just bought underneath bar 15 or the close. Why? Because it's still a limit order market, and they will buy anything that they see, or they will buy under anything that they see strongly bearish. If you're trying to scalp these, just be quick about it. Okay, don't linger in a limit order market. Now look what happened with this 15-minute bar. That 15-minute bar is a really strong, but did it close beyond that bar? No. So machines see that and they see, well, good try, bears, but how come you just fizzled out there and couldn't come down and take out that low? So limit order buyers jumped in, and they're buying and they're scalping towards the 33% pullback, 50% pullback, maybe 66%. So they're buying and scalping, buying and scalping. And as this bar on the 15-minute goes up and down, it's because they're scalping at the range. Remember, any bar has a range. 0, 33. I'm not going to take 50, but that's an institutional level. 66, okay, and 100. Or if you're counting from upside down, that would be 0, 33, 50, 66, 100. So it's the same thing, right? They both down here, the breakout of this range, every bar is a range basically, right? So if I actually measure that, watch this, right? Look, 0, 66, right around 66, they scalp that pullback. Same thing, look. If you bought underneath or the close, where are you going to scalp? 66, 50, somewhere here you scalp out, okay, and get out of the way. If you're trying to go more than a point, it's tough. You have to practice it, or just stay out of it altogether. Just be patient. We're going into the 18th bar range now. Now, let's measure the range we have, right? So here is bar 1. All the way down here, it's only just about 35 points. It's not that big of a range. So that means we can actually break out and get double the amount, okay? So we could either break out to the downside, or we're going to make a higher low double bottom and finally go back up. EMA is catching up. I'm still not interested in buying, because there's nothing there that excites me. We do have a breakout from that, actually, triangle now. And we now have a second bear bar. Okay, so now bears are trying to come down. Those bulls who bought underneath here, okay, or there, they made money, but they could not continue to go back up here. So they're out, and there were no additional bull entries or bulls in the market. So now we're coming down. If this bar in 6 minutes and 50 seconds closed down here, potentially we could come down all the way here. So that means we could end up getting possibly, okay, if we do get this big measured move down, I can already measure this, maybe like that, okay, or like this, but the bar has to close first. So this would be a conservative target. This bar closes somewhere down here, really strong bearish. It's potential we could come down more. And if we actually break this low, then you have a much better, okay, breakout target, but you need to see a really good bear body close. Otherwise, we can make a double bottom and then go right back up. We have a trading range here. Market will eventually want to go up. It's probably waiting at the end of the second hour, so 10:30, 11:30, before going back up. All right, so we might get a double bottom at the Globex low with that low. If bulls are looking to enter somewhere down here. Now I want to measure a little bit. So it's 67.25, about 66.25. So 1 point below the Globex low, we can actually do a fake breakout and then suddenly go back up. Because right here is just about 67.25. This one is 66.75. I don't know, somewhere around that vicinity. So there's a potential double bottom here if bulls want to reverse, because they also see what? 1, 2, and 3 wedge and a double bottom, or 1, 2, and 3 wedge, or maybe 4. Wedges can have 4 pushes before going right back up. Okay? So I'm kind of anticipating about bulls here if the bears fail to sell. We might make that wedge also here, 1, 2, and maybe we would overshoot a little bit before going back up. It's not 11 yet, so we still have another 34 minutes for bears to continue to sell this before bulls show up. We got stuck inside this bar, so if I measure, that was the outside bar. We just broke out now. That was the first target. This is the second target the bears are trying to reach. But can they make it? If they do close a bear bar here, that means they're going to make a new low. That means this can still drift down even into these lows. But the only way to decide that, to see a bear body close, okay, below that level, I just have to make sure that I am measuring absolutely right. See that? There's no bear body close. It closed right at the level. So you wait for a pullback. If you want to sell with a limit order, You may sell at the breakout point. Look at that support, broke down that support, pull back. You can sell for scalp. But if you want to sell into this target, that means you need to see this bar 18 close somewhere down here or underneath that. If they do close it, they can continue to come down here, maybe even further to 1-to-1 target, which is down here. So this is where the bears are trying to reach. But because this bar failed to close one tick below that level, I am worried about we might just tag here and then go right back up. But we're so close. ATR is 8.5, so we're probably going to meet that target. There it is. It's coming down. Might want to take profit one tick above that red line, which is 69. Look, we just came one tick above 69.25, and I just said that you might want to take one tick above that red line, your profit, if you're worried. It's hovering. Oh, okay, so the target met. All right, bears got their target. Now, if they do close this bar here in 20 seconds, underneath that red dash line, this is their measured move target. Breaking out of this mess, which is a tight trading range, breaking out, and that's the measured move target right there. But they need to close that bar down here. It's coming down. Globex low is target. 1 hour target right there. Okay, so they did close 18. Bar 18 is a very strong bear bar close, and it made a new low, but it failed to close below that level. So that's a problem. Now I expect a pullback. But if I want to sell, I would like to put maybe a sell stop order one tick below 18 if I want to take profit down here. Okay? Or you can wait, limit order, wait for this bar to go up somewhere, maybe 50% of this bar range, or 66, or maybe at this level where it broke down, to get in with a limit order. But it's not guaranteed that you will. But if you put a sell stop order one tick under, and if you're sure that we're going to come down to the measured move target, your order will be swept away one tick below the 18, and you're going to be, okay, shorting this. So there it is. You entered into your short. You're hoping to make at least a 1 point and a continuation into here. Well, what's happening? Let's take a look at the entire day, and can we continue to sell this? Okay. Well, I'm looking at the open, and we have down, and we have almost the same size of down. We have almost the same size of up. So there's a confusion here. But the one thing that's happening here is that, like I said earlier, bears maintain that bear gap, okay? And chances are, by the time we get back up to the EMA, it's going to be more than 20 bars. And when that happens, okay, we are probably going to sell again. So in hopes of making maybe 1, 2, and 3 push wedge before we finally going back up. That would put us into after second hour sideways and up price action. We may not sell strongly because this sell-off, although it was a sell, okay, it was a trend from the open. You can see first 2 bars are closing on their lows and a third bar, but continuation fizzled. And the reversal was pretty strong there. So this right here is kind of dampening the case for bears. But they can still sell. Now I would love to sell the pullback to the EMA and see if they can actually manage to have another low and another low. But right now, it's not that strong, but they're selling anyway. Broke that. Or try to see. Okay. Maybe. Can we come all the way down here? They're going to have to do a lot better selling. Okay. It's not that. We need bigger bars. to get all the way down here, but there is that projected trend line. It's kind of out of the way, but about 3,700 level. 3 bear bars, 17, 18, 19 is not that strong, but they did close below that level. So I'd like to see bears actually come down here and test this level right here. But it's not that strong, but still it's consecutive 3 bear bars now. We didn't quite test the, what that is, the Globex low. We tested the Globex low. Okay. Now I warned you about that double bottom at the Globex low, possibly. So what if we don't come down here? Well, there are probably limit order sellers here. Okay, they're going to probably try to sell this down because we made a new low. Okay, we made a new low. We have last 2 bars, both of them are closing on their mid and lows, and another 1/3. So most likely sell orders, limit sells are here and up here. So from there to breakout point to the high of bar 19 limit order sells, they might try again selling one more time into here. Now, why is this bouncing? No one is asking me that. What's the reason other than meeting a target there? Well, there's a reason. Check something here. Yep, so market moved 10 points there, okay? Just about. Now, if you actually measure from there, I think there to there. No, sorry, that was a 10 point right there, so I need to measure from here. So that was a 20-point scalp. So bears sold the market 20 points from there, are scalping here and taking profit. That's another reason why we're bouncing here. Now, why did I measure from there, but why didn't I measure from there? Well, look at the amount of bulls move the market, 9.5 points. Anytime market moves more than 5-6 points and it tries to take profit at a 10 point, like I said, 1 point below 10 point profit taking begins around 9. Look, they already accomplished what they came here for. So this is a strong reversal to me. So I will start the count from here because they sold underneath that bar to move down, okay? And that to me is a 20-point move and they're taking profit. Or if you count from where you sold, whether underneath bar 15 or 14, then you measure, that's a 10-point scalp right there. See that? So 1 tick below 14 or 15 is right there. So that's a solid 10 point if you measure the way Al Brooks measures. Okay, I would sell below 15 and that will give me a 10 pointer. But if you measure from there, you're in the 20 point zone, same thing. That's why it's bouncing and these bears are taking profit. And the Globex chart made a double bottom. And look where we are. I marked the area to the tick on the 1 hour. We tested that area. So that's why we're bouncing. So everything's adding up. And there's a wedge. Okay. Maybe 1, 2, 3, or 1, 2, 3. There's also a micro wedge here. Down on this, up on this, down on this, up on this, and down on this. So there's a micro wedge there. So this is the first entry long from the lows. Or you could say this was the first entry long. Now we're getting a second entry long. But we made a new low. So I'm going to start the count with this bar going above bar 19. So we're kind of reversing. Now reversals, 18 bar reversals can start after bar 18. It can start with bar 20, 22. And we did not get that continuation from that mother bar or the outside bar that we were stuck in, which was this right here. Now, can they still sell? I said earlier, if these bears want to sell and want to come back down here, they're going to sell above the bar 19 to possibly right there. They ended up going all the way up here. So I'm not so keen on selling this anymore. If they do sell, it's probably they're going to want to try to get out because they have sold underneath bar 18 and they're probably stuck and they're disappointed with this bar. So they're selling at these highs. Maybe that is the breakout point. That's why they sold there. And they're trying to break even because they're disappointed. So they want to see that bear bar come down here once again, okay, to break even. And again, if you're counting from the lows for your high 1, high 2, you entered one tick above bar 19, your stop is below bar 19. You know, you're not going to go too far, right? So because it's not the high 2 entry. So from the lows, and the market is bearish, it's making new lows. It's making lower highs. So you're trying to buy something that is not bullish enough. So you're not going to go too far. And the bears are rejecting the first bull close. But there's still 3 minutes. If the bar closes last minute, it comes down here but not able to go breach bar 20 low. It comes down here and suddenly starts to go back up, okay? In the last half of its longevity, then we could get another, possibly a bull close, okay? And if we do go up above this bar, then we have a potential going back up. We could make it 10 bars and 2 legs, or 8 bars and 2 legs to EMA. So if you count here, 1, 2, 3, 4, 5, 6, 7, 8, we made 2 legs, but we could not reach the EMA, and a bear sold. Okay, so the market is still bearish. But this is what I'm watching right now. What will the bar 21 do? Will it go and test below the 20 and break out and sell? Or last minute, will it actually end up closing on its high? Now, I want you guys to take a look at the monthly chart, okay? I had this measured move target here, and I put it there, and I never removed it, and I said, even this moving average is a magnet. So somewhere around 34, 55, 50, okay? Bears are trying to swing this down. Why? There might be a wedge here that they're trying to form. 1 up, 2 up, and they're trying to finally getting their third leg down. So if market is going to keep sell, we could end up coming down here, guys, and make that wedge, and then that would become possibly something like a bull flag in a way. Or we might come down and test this high. You see that high right there? Just about where it's a little above the measured move target. Just there, 45.25 versus, no wait, I'm measuring wrong. Sorry, what is that? 64? Oh yeah. There's quite a bit of difference there. I'm going to put the line there just in case. Yeah, so somewhere between that and that, we could end up testing. So we're still bearish. I cannot buy this. I didn't even touch bar 20 close. I didn't even buy above 1 tick above 19. Now, bar 21 closed on its low. That is good for the bears. So, but I don't see a breakout from the Globex low. Now, as soon as we breach the bar 19 low, stops will move 1 tick above bar 20. Okay, so, but this bar needs to close down here. If they do that, these swing bears are going to move their stops right there. But now we have wedge. Okay, we have also wedge. So are we going to squeeze out from down, or are we going to reverse and go right back up? There's a wedge here. 1, 2, and 3 now. So if you move your stop above 20, you're hoping that this bar is going to close down here and it will continue to come down. But if it starts to become a bull bar, then that's okay to keep the stop up here, because if it closes as bull bar, then we have a wedge bottom and we're going to reverse back up. You don't want to give too much of your, if you were swinging this down, you don't want to give too much. Weekly bar is very bearish. So we're trying to probably test these lows. Now look at the daily. Price is still respecting my lower trend line on that channel. We don't have a Globex low breakout yet. We are testing this low and what's underneath. There were buyers there that Asia session into London and UK session, they broke out. Look at that. So probably they're going to buy underneath these lows again, and that's what they're doing. So if they can close this bull bar on the 5-minute above, let me see, above 37.72 or 73, we can suddenly go back up to 37.81.50. So I'm going to wait for this bar and where's it going to close. So we now have a wedge. You can see the wedge. Okay. Okay, we're trying to break out of that. I want to see bulls actually close somewhere around 37.73. If they do that, that means we could go up to, again, 37.81.50. So I'm waiting to see how this bar is going to close. It's not yet end of the second hour, so we have not seen a reversal yet. Remember, reversal can come in around bar 22, 23, maybe even 24. Bears are not breaking strongly. And look at this bar. That's a beautiful bear bar. The continuation is not that strong. It made a new low, but it needs to close really nicely bearish with a bear body. And there's spike channel. You could see spike, pullback, and channel. So we are going to eventually go back up to these levels. And sellers are probably waiting there wanting to sell. All right, so no bull bars. We did not go above 73, 37.73. So bears are still in control. Stops are moved above bar 20. Bears are looking for breakouts to downside and squeeze out of this wedge and possibly come down to 37.61.50. $37.61.50, 37.61 area. See if they can actually sell this a little bit. Maybe like go 4 more points. I'm sorry, 3 more points. Go 4 more points. I'm sorry, 3 more points. So somewhere around 61 and 61.50, they might bounce. Careful. Okay, so I'm going to go back to that chart again. Okay, so what is happening here? Right, so we sold, went back up, made a double top. That's a double top to me. And look at that, 2-bar reversal, 2-bar reversal. Then we went back up, lower high, right? And then now we're making new lows. Now we're coming down, making new lows. But eventually we will reverse. Maybe a small pullback bull trend back to EMA. Now, they tested the EMA here. We have not tested anything. This could be also us right here, okay? Small pullback bull trend, we might get that. Or we're just going to go into some kind of trading range and get a rejection at the EMA. So we will eventually get to the EMA, but that could come in. I mean, be prepared, that could come in around bar 38.40 by the time we get to the EMA. So bears should continue to sell this. Let's see, 61, take out two more, 60-50 area, 60-50 area, 61 to 60-50 area. I'm just going to wait to see how this bar is going to close. There's still 50 seconds. It's not really going where I want it to go, but it hasn't closed yet, so. I count what I've done there, the math that I've done there is, see this big bear bar and a continuation. So basically what I'm doing is I'm measuring from that breakout the amount of, okay, ATR. At that time when I measured it, ATR was a 6.75. Okay, so the way that I scalp this is that I look for a pullback and I enter right around here roughly. Okay, so, and if I enter there, or, yep, right there. So I'm looking for about 6.5, or right now it's 6, so it should be just 6 point. So I'm expecting bars to come down and tag 61.75, whatever the ATR is. But I don't really go for 1-to-1. I go maybe a 1 tick less. So that would be 575-ish. Now they came too close, but it doesn't count. They should give me what the ATR is showing me. If they go above, obviously, where I entered, like 2 point above, I would probably hit close because I'm wrong. Market is reversing and I'm not going to get my scalp. Now, I already scalped, okay? So I already got more than, 2-3 points. I got more, just about 5 points, 4.5, say, okay? But I didn't get the quite full 6 points there. And if this bar closes on its side, I hit close and I'm out. I still walk away with money, but this scalp is dying because of this wedge and an overshoot. So market is trying to reverse, but I'm going to leave it there because my stop is far away. It hasn't even really closed the bull bar yet. All right, so if it hits 69.75, I'm out. 69.75, I will be out because it's gone 2 points above where I entered. Oh, that's it. It hit. I'm out. I'm not going to even wait. I'm done. I was only willing to lose 2 points there, and that's it. Not interested in this scalp anymore. And now that I'm out, it's probably going to come down here. But that's okay. The reason why my scalp didn't work here, or it's looking like it's not working just yet, it still can't come down here. It's because it already pushed. It's been, machines have been scalping to the downside. But now they see a wedge and an overshoot and a doji, so they're struggling to go for another scalp, the amount of the ATR. So I volunteered to exit out of my short, and I'm okay with that because I still walked away with, I couldn't get the full 6 points, but I got 4 points and 2 extra ticks. And then I gave back 2 points because it went up above my entry price. So I end up walking away with 2.5 points. Tough. Okay, you see how I exit out? And that's what the problem is, because you got a wedge here, and all you could get was less than what the ATR was. And market is telling me you're not going to get the full ATR. That means bears are losing steam here. And you can see it right here. This was a buy zone. We tested the Globex low, but there is no bear bars breaking below the Globex low. So, and I did say, you know, we're probably going to test what's in here, but as long as we start, you know, we start to close bull bars back inside the Globex, we could go right back up again. We're coming, okay, so we're coming to that sideways and up for a couple of hours or the rest of the day, but I don't know if we're going to be sideways and up. We're definitely going to go sideways to the EMA because it's already after 11:30. So, new bar, new hour. We have a really nice bar 24, limit order market still, but 24 is a strong close. So now we could get 2 legs up to EMA, but I'm going to wait for how this 25 is going to close. Now, I did say earlier with the reversals, look for after reversals, you know, reversals come in 22 or up to 24. Now look at bar 24. Bulls might be trying to get a 10 point from here. If you measure from the low of bar 25 or low of 24, I'm going to measure from there. So that's 8 points, 10 points right there. Now, why did I measure from the low of 24? Because up until the low of 23, market was still bearish. That's a bear bar. They pushed bearish. So this is where we're going. They're going to scalp right here, which is 76.25. Well, the low of 23, market was still bearish. That's a bear bar. They pushed bearish. So this is where we're going. They're going to scalp right here, which is 76.25. They can continue to go up the 14, 15 point level to the EMA. Okay, so we are at the 10 point and they're taking profit, but that bar is strong. We might end up going to actually the 14 point, 15 point area. So 14 point is right there. 15 point is just about little above the EMA. Since this is a 20 bar gap to the EMA, we might just get to that level. Okay, I'm going to leave it like that and start to take profit. So this is great. I went long, but bears will do anything in their power to keep the gap open to the EMA so they can sell again. But you see this little area here, area of agreement? This is where the bulls are trying to test. And that was also a triangle in a way. So the triangle breakout, or the apex, this is where the bulls are trying to go. So right around that 14 where I marked, you may want to pay yourself before it actually touches the EMA, because there might be sellers heavily waiting there trying to prevent the EMA touch. But I did say if we do close a bar around 73, a bull bar, now look at this bar 24, it actually closed, it didn't really close where I wanted to, but it did test 73 and above, and they did close it closer to the level where I was thinking bulls can actually take this price and bring it up to 81.50. So 81.50 is still your target. 81.50 is right around here, okay? And 81.50 happens to be just about 15 point scalp zone. So somewhere between the 14 and the 15 and the EMA is target, including 81.50. So if you want to pay yourself there, be my guest. And okay, guys, let me interfere here a little bit. Let's be respectful to one another in the trade room, okay? The Discord. Some of you are excited and want to share your knowledge and skills, and that's what the Discord is about. And I love that you guys are posting. It helps me too, I have to say. It's like, for example, I'm going to call out YC47IB. You had to pick these, numbers and letters to make it easy. YC. So I love that he's actually posting this stuff. It's actually cool. But maybe during the trade room hours, because the trade room is basically everyone to ask questions, maybe the frequency level can be adjusted. But I love that you're calling all these things and, posting. It might irritate some people. Listen, when I was in your shoes, and I used to do that, and they used to tell me, we know you were so excited, Rose, but why don't you just, slow down a little bit? And people used to say that. So you're going to get this, and that's fine. Don't be discouraged. And I know people are learning from your experience. You're obviously experienced. But during the maybe from 9 to noon, just adjust the frequency, and that's it. But don't be discouraged. Keep posting. I love that you're posting. But please, everyone, please be respectful to one another. We're here together, okay? We're all trading the same thing. And then you can up the, frequency after I leave. And that should just solve the problem. But again, I'm going to say this again. Let's be respectful to one another, okay? All right, I'm still waiting for bulls to get to the 8150s or to EMA, but I warn you that the bears are trying to keep that gap open no matter what, so they can keep selling this and making new lows. Now, we're still in this wedge. We did not break out. Can I adjust it? I'm just not going to touch it. We're still trying to break out. We failed to break down, and all right, I'm still waiting for bulls to get to the EMA, get to the 14, 15 point scalp area, okay? If you're measuring from there. Now, if you are measuring from here, one tick above this doji, buy stop orders, see, I'm looking for a 10-pointer, solid 10-point, and that is right there. Okay, let's see if the bulls are going to get it. I did that, Josephine, this morning. I think you missed it early on, around 9 to 9:30. I'll do that again tomorrow. I'll go over some buy and sell zone, support resistance. Beautiful 3 bars. I don't like the bar 25, but it is still a continuation bar. Look at where the body closed, okay? That is still a good, it's the body of bar 24 is filling the wick, upper wick of body of 25 filling the upper wick of 24. So now we're getting a second leg up to EMA. All right, so 30 more seconds. We should get that 10-pointer. 8150 is still the target. But first, on the Globex, we need to start closing bars above the mid-Asia. Once the bulls start to breach above middle of the Asia range, then the magnet becomes the midnight open for bulls. But we're stalling there. You see that dotted gold line? That's actually the 50% Asia. Bears are trying to keep us below that so we can break out and keep selling the pullbacks. And the goal is to, on the 5-minute, keep this gap open to EMA. So, and I think we might be able to test that EMA because 3 bull bars, 2 of them are closing on their mid and highs. it would be shame if we cannot test it. Now, if we do fail to test the EMA, I said earlier, watch out, because somewhere around bar 38 to 40, maybe even 50, we might still sell and then finally go back to EMA. We will test the EMA, but if market is not ready and the bears are still trying to keep this open, okay, we could still sell, and by the time around bar 40 to 50, we might actually finally start to move above the EMA. So what's happening with the 10-point scalp? Well, 5-point they got a continuation. 9-point they got, so that's still good. Remember, I always said, you know, you may not get that full 10-point if market is gapping down from the EMA. So, but they got the 9-point. So if you're again measuring from here, that right there was 10-point. So they tested the 10-point. In order to get to the 14-point, they need to close a bull bar above 1175. Do you see a bull bar closed? That's one of the reasons why we're still pulling back. But don't be despair, because this could be a pullback to have another leg up. Okay? So I still think that we're going to eventually get to, I'm going to mark the 14 and then the 15 above. I still think that we're going to test right here. And if the bears are going to want to sell this, they better get some kind of a double top at the EMA and then sell. Okay, we are bearish. We are way below the 1-hour EMA. So if I'm going to sell this, I want to sell around the EMA, maybe with a double top. I'm not ready to sell it yet, because this is probably going to still want to go back up to the 81.50. All right. Sorry, I was doing some messaging. All right, so this is a pullback right here. And we have high, say you're counting from one tick above 23, that's your high one. Bulls are trying to get a high 2. Target is still 81.50 for the second leg up to the EMA. Bears want a double top. That's it, we're coming in. Good job, good job, good job. They're gonna scalp here. Okay, so be careful. We should test the 81.50. Now, bears want the double top with bar 25 high, but I think that's just too early to sell. We should get that 81.50 tag. 15-point scalp is right there, 14-point to 15-point. Right there, it's the same, 81.50. There it is, target met. Good job if you held it. Or if you bought the second leg up, one tick above either 26 high or 27 high, you made money. All right, so do I ever look at the ETA chart? Well, that's what the Globex chart is for. It's not 5-minute, but it is 15-minute ETH. I have it on the other screen. I'm price action bouncing at the 5-minute moving average all day. Is this just a coincidence, or does the ETH affect the U.S. market? Well, let me put it this way. EMA does not affect the price action, okay? EMA basically reacts to the price action, to the bars, okay? Because it's calculated with how the bars open, close, high and low. So basically, it's just an indicator. You don't need it. Now, but because market has been, I mean, look at this, right? So market was coming down. We made a bear flag, double top sold, and now we've got a wedge, right? Or you could say this is a double top and a lower high. So that's another flag. As long as we breach those lows, you're actually getting a measured move target. So the bears are in control. Then bears go up and they make a double top and a lower high. That's a double top and lower high. That's another flag. So basically you're looking for this low and that low to be breached. They breached it, but the problem here is not that we're not getting continuation bear bars. So what does that mean? Finally, market might be looking to turn around. Okay, so EMA is your magnet. Now I'm looking for a wedge double bottom. Wedge double bottom is essentially an inverse head and shoulders. Okay, so you're looking for first bulls to break above that, then come back and break above that double top. This double top and that double top. And when we do that, we swing high with the measured move target projected. Okay, this projected up. And that will become the measured move target. Now look what you're seeing here. So I have double top, we came down. Now I'm looking for, where's the other double top? It's probably here. Okay, so I'm looking for if this is going to go back up and if this is a wedge, right? So we need to go up, come down, go up, possibly come down. That would give us maybe a deeper pullback for right shoulder, go back up, and then we could next couple of hours sideways and up. So that we could go sideways here, make that right shoulder, and then go up. So you can use it either way, or you could say, hey, listen, I see a channel here. So that means I am looking for bull bars to get back above this midline of the channel. And then I'm going to buy those bull bars all the way up here, and I'm going to take profit probably somewhere with that high or that high with maybe a breakout, false breakout, and then come back down and I'll sell it. So either or, you know, there's so many different ways to look at it. You can trade the ETH. Same thing, but a little bit more consolidated view, okay? Same channel, same wedge, okay? You can use, or you can look for a inverse head and shoulders right here, right? So you're going to expect a pullback. You do not want to see bears breach that low with bear bars. If they do that, that means invalidation of the inverse head and shoulders. Then you look for a bull bars and go up and up. Okay, everyone? All right, so target mat, I'm just going to get rid of that. We squeezed right out of that wedge. Good job. Here's another, I mean, I didn't really touch base, but I talked about many times, if you're trying to reverse or buy a wedge bottom, okay, find the last bar. 23 was the last push, the third push down on the last bar that made the low. Now, what you're looking for is basically, okay, to go long. And to go long, you have already a signal bar closing really strong bullish. Now, if you do buy that, that is the first entry. Better to buy the pullback to the box or to the high and then enter. That is your second entry long, and that is high 2 from these lows, okay? So, or if you entered here, your stop is here because you do not want bear bars to come down and close. If they do, that's it. This is invalidated. They're probably going to keep selling. But that never happened. See, we finally reversed. So this way, you can actually add another buy order right there, or that's a stop entry. Or with the pullback, you can put a limit order there, okay? And as this bounces, now you're compounding. So you're going to scalp most of your contracts at the EMA because more than 20 bars gapping down from the EMA, chances are we might end up making a double top and sell. So you don't want to be stuck in that and pay yourself at least a little bit here. And if they do start to close consecutive bars above EMA, then we're always in long. You can keep buying and buying and buying. But I did say that the bears want some kind of double top at the EMA, and they will probably try to sell it. So these bulls are taking profit there now. We have tested 81.50, but we did not close a bull bar above 81.50. So this is profit taking still. Okay. just trying to see if there are any questions here, because I'm going to be ending the session soon, so I'll take a couple of questions. It's the 15-minute. I mean, it's really a free indicator. I just use it out of box. I don't even change anything. It just shows me, and I don't even need it. I only use it because it happens to be super accurate, even though it's a free one. I just love that it finds dead on very strong point of control areas. Again, you don't need it. Now, why you don't need it? Because remember what I was teaching earlier, okay? If you see a lot of overlapping bars, overlapping bars and a huge move, impulsive move, and you got overlapping bars, you know the bulls are going to try to test there, and it's going to come down. So I put it there for you guys to pay attention to, okay? Otherwise, I don't need it. I don't even need the VWAP. I don't care, okay? I don't need to see something colorful telling me that market is going to sell here. I already see that this is a breakout test, and most likely sellers are waiting. I already see that the buyers were here, and if we do break below it, when we get back up, sellers are probably there, okay? So that's the price action, but I only keep it for you. Now, you could see that this is a volume profile, which is not part of the BTC, okay, Brooks price action course. But if you see a B shape, okay, right here, now here's the thing with the B shapes, right? So basically, market moves below it, it's going to go back up. This is the heaviest part. Chances are sellers are going to sell again. But if there is another area, maybe it's like this. There are like 3 areas. You see this? Once we start to get above this control, point of control, or the widest part, or this balance area of interest. Oops, sorry, I didn't mean to do that. So here, same thing, right? There's another area, larger and a smaller. So once we start to get above with bull bars, this becomes the next target. So bulls are probably going to want to get back up there. Why? And you don't need it. Why? Look at this. There is an area of agreement, right? A tight trading range right there. It was also a triangle, broke down. So somewhere around here, when we get there, sellers are waiting there. I'm just leaving it there so you can see where those heavy orders might be parked. I do look at now for the divergence. Again, here's how I use divergence. You don't need any indicators, okay, for divergence. Now, basically, wedges do show you when the divergence is actually setting up. If you have a triple push wedge, okay, especially if you have nested wedges, you can tell we're setting some kind of divergence, okay? But to see a divergence, you need some kind of indicator, maybe stochastics or MACD. I don't know what else is out there. Maybe RSI, but you really don't need it, okay? Basically, when a market the day before was bearish like this, you're going to get continuation first 2 hours, okay? But look at the continuation. It's not there. It's not strong enough. It's actually going into some kind of trading range already. Now, mark these highs. Even if there's a divergence strong, it's telling you to go long. Chances are sellers are waiting there, and we're going to get rejected. Okay, so I stopped looking at those indicators a long time ago. Now, there's one that I like to use. It's this one. It's on a chart, actually. I do have it on a chart. Just have to look at another monitor. So here, let me show you. But again, okay, why didn't it work? Here we go. And it's just so simple. It basically is showing me the bottoms and the tops. Did I just Okay, so it's still calculating. Just give it a second. I don't like to use indicators, oscillators, but I'm going to show you this if you're interested. This is the only one that I look, and the only one I use is ATR, which is, it kind of tells me. Now, I use ATR because it makes life easier, so I don't have to keep measuring these bars and how big these bars are. It just tells me. I think I just locked the application. Sorry, it's not, I guess it's not meant to be. But anyway, I'll take a screenshot and I post it in the Discord for you. If I have locked this, there's nothing I could do to fix it other than relaunching the application. Now, ATR is the only one that I use. Now for this is visual. I'm using this because it can be helpful to see where the majority of the orders are, but you really don't need it. I think I just locked it, so this is now frozen. I don't really, the only thing for the moving average, if you're talking about the 20 EMA, just you got to make sure the period is 20, and it's an EMA, not SMA. I don't know how that works on TradeStation. The other question, bar 30. Let me see. Well, you do have a sideways bars, right? So you are in a tight trading range since bar 25, basically. So bears did sell the EMA. Yeah, this just died, so there's nothing I can do about this. I'm gonna have to stop the streaming. But right now we could get another leg down. Now I'm also counting wedges, right? So you have, let's see, bar 20 and bar 25, and then bar 29 highs. You have a wedge here. Now you do have bar, let me see, bar 30 is the first bear close. Bar 31 is a pullback to the last bar that formed the wedge top, and that bar was bar 29. So, and that's a pullback bar to that. Think about, picture a red box there, okay, with the height, the same range of bar 29. So the bear is now trying to get a second sell, okay, with bar 32. If they do close bar 32 on its low, that'll be their second sell or second entry short. Okay, nothing I can do about it. I'm just gonna have to end this. Or here, let me. I want to show this. Let me switch to another chart real quick. Hang on. And then close that without saving. Okay. Now I'm going to reopen that. Just hang on a minute. Okay. Now I'm going to reopen that. Just hang on a minute. Yes, actually, that's a good question. Actually, good suggestion. If you have any kind of indicator conversation, best to move it under the indicators and scripts channel. ATR is a basically average true range of a bar that goes a certain amount of points up and down. Okay, so now it tells you also the volatility in the market. Okay, so say ATR, in the past, ATR used to be always less than 3 points, right? So if you look at it right here, it says 733. That's really, there's no such thing 33, right? You only get filled at 0.25, all the quarters, like 50, 75. So you roll it down to 725. So it's telling you, ATR, So these bars can move 7 and an extra quarter up and down. Now, it doesn't tell you whether it's going to go up or it's going to go down. That's where your price action reading comes in, okay, handy. If you do read the price action correctly, then you can say, I can buy this and I might be able to scalp half the ATR and then leave a runner to give me the full ATR, maybe 7 points. Okay, so you could do that. Now, every ATR indicator works differently. Some use periods. I look back 4 to 6 bars back to get this calculation, but they come in with, by default, they look back 14 bars. I don't care what happened in the 14 bars back. I'm trying to calculate and see how much I can scalp and swing. So I look back 4 up to 5, 6 bars, and that's about it. So that's the setting that you might need to pay attention. So if the ATR is, nowadays, since 2020, right, market has been volatile. So true average range ended up being over 5 points. Okay, it no longer goes down to 1.5 point. Like, we don't get these slow S&P moves anymore. S&P is so liquid. There's so many orders and so many traders around the world. Okay, so we get a good volatility, consistent volatility throughout the month. Some days are a lot more volatile. But this tells you how much the market is going to move average, and then you can adjust your scalping or swing trading. Okay, so right now anytime it's above 5 points, it becomes very volatile. Okay, so it also affects your stops. So I use also stops against, with the ATR in mind. Say, if ATR is telling me, and I bought right here, okay, and it's telling me it can move 7.5 points, and if I put my stop right underneath here, okay, so let's measure that, right? So I'm going to measure, say I entered right there, and I put my stop 1 tick underneath that. That is 5. That is lower than the ATR. Now, ATR just went down to 595. But you see what if this was a 7 point or 7.5 points, and I put my stop smaller than the ATR value, I'm probably going to be kicked out. So I got to make sure it's at least a little bit more than the ATR value. Say this is 8.5. I'm going to put my stop somewhere around 8 points, if I can afford 8 points. Okay, 8 points is what, $400? Yeah, with single contract, I think, right? So you have to ask yourself, can you afford 8 points? Now, say ATR is 675, 6 points and 3/4, and I entered long here. Obviously, the price turned against me, and I put my stop right here. That's less than 675. See, my stop is right there. Chances are it's going to kick me out because I am entering my stop less than what the ATR is. ATR is telling me this bar is going to move more than 7 points. You are at risk here with your stop being so close. So that's another reason I use ATR. And it needs to be on each tick, not bar close, not price on change or price on close, whatever. It should be on each tick. That's the, you need to use that because you want it to be accurate and calculated on each tick. So there's that. When ATR is over 10 points, I try not to trade, or I switch to micros right away. Okay, because that means my risk needs to, my stop needs to be further down beyond the 10 points. I can't afford that. I have a small account. So the way that I trade is I don't have a big account. I have actually 2 personal accounts and a bunch of prop accounts. But on the personal accounts, I make sure every month I start with $2,000. Okay. And then my job is to build that, make that $2,000 minimum $10,000, or I try to make it between 5 and 6 grand every week, and then I take out. Okay, I withdraw. So every month I start with 2 grand. That means I cannot, if I'm scalping or swing trading, I don't have too many, contract sizes to trade with or fix. So I don't fix bad trades. I immediately get out of them if it's going against me. So until the $2,000 account becomes, I don't know, like 5,000, 6,000, I don't really fix any trades. I tend to scalp or do a swing trade once a day. And then I look into scalping with limit orders, okay, once I have some kind of cushion. So ATR helps me a lot. Okay, look, my stop was underneath 32. I'm kicked out. I'm done. I lost all of that. But you should not be entering. Now, price action, if I did not enter go long here, I would have probably used the reason because this is overlapping bars. This is a tight trading range. And instead of buying here or buying the close, why don't I just sell? Because if I sell, there are limit order sellers are probably there, or I don't know, maybe somewhere there, yeah. And instead of actually looking to go 7 points above, I can actually do 7 points short. So what I can do is I can grab 3 points where I sold, maybe there, okay, grab a 3 points and leave a runner to go to whatever that 725, okay. And by the time it's coming down and I'm still in the trade and my runner is running and ATR becomes 9, then I'm going to scalp at the 9 point, not 7.5 or 725. Because ATR is telling me now that bar can now go 9 points. So, and that's how I adjust my stop and adjust my profit taking with the ATR. Other than that, you need nothing. So just your EMAs, and that's it. You don't need, and eventually I'm going to clean this up and I'm going to get rid of all of this. I'm just giving you guys some clues on what I read and what I look for. Okay, so I want to do this one more time, that indicator that I talked about, and see if I can actually do this one more time. It's just killing the chart every time I insert it. All right, I gave up on this. All right, I'm going to end this session, and I'll see you guys tomorrow morning, okay, at 9 a.m. Have a great day. Be safe. I will be in the trade room, Discord trade room, posting charts, most likely under ES analysis only if I'm trading. Otherwise, we'll pick up at 9 o'clock tomorrow morning.